Alright, what's going on, guys? This is Luke here. Today I'm going to make a video going over my continuation model. A lot of people have been asking about this, and I have made a few videos on my continuation model, but I'm going to kind of do an updated one and how exactly I'll be trading it going into the new year. Obviously adapting with how the markets are, but this is how I've been trading the continuation model lately and how I'm going to continue to trade it. So before we get into it, guys, if you guys need a discount to Alpha Futures, right now I'll be dropping this around the 25th, so on Christmas, but the sale from the 23rd to the 26th of December, we have 40% off at Alpha Futures if you use code LukeX, and even if that sale's over, you can still get the best discount available at Alpha Futures with that code. So if you need that, link is in the pinned comment, and if you guys want to join the Discord for some live trading, pre-market analysis, all that stuff, I'm always active in there. Link is in the pinned comment as well. So basically, here's the checklist of what I use for the continuation model. So we're going to go through the checklist, and I'm going to show you guys like 3 examples. I'll just pause after every single one, and then I'll start the next one. But first, I'm going to read through the criteria. And basically, the main thing you're going to need is a clear draw on liquidity. So that's going to be a session high, a session low, previous day high, previous day low, a higher time frame for value gap, like a 4-hour, 1 hour, just a clear place that you think price is going to draw to in a trending market. So what I use is this ICT kill zones and pivots indicator. As you can see right here, if you go to indicators and you type that in, it's going to be this one by Trade for Op. You're going to add that to your chart. You can customize the colors and all that stuff like that, but I'll show you guys the settings really quick on it just so you guys can kind of see everything. Oh, sorry, this is the wrong one. But okay, so you guys want to pause it and go, those are the exact times you're going to be looking at the kill zones of every single session. You can copy that, go through it. Here, I'll scroll back through it again one more time if you guys want to pause the video and save those settings. But this is exactly how I use it. So number one, again, you're going to need a clear draw on liquidity, which is going to be a session high. So it could be like London high, London low, Asia high, Asia low, previous day high, previous day low, New York PM high, New York PM low, whatever. Just a clear draw. Then you're going to want to see price delivering and respecting out of a higher time frame for value gap. Now, when you hear higher time frame, normally you're going to be thinking of the 4-hour and the 1 hour, which is valid, but you can also be obviously looking for, in terms of this continuation model, I'm mainly looking for the 15-minute, the 5-minute, and the 3-minute. Like, for example, let's just say we have a fair value gap. Let's just say this is a 5-minute gap. We have a clear draw right here. Just say this is London high. Okay, price right here is trending up. We get a pullback into let's just say that again, like this is a 15-minute gap. We get an entry model out and we target that next draw on liquidity. That's pretty much it. But this normally is going to be a 15-minute, 5-minute, and a 3-minute, something like that. But again, you can go down to a 2 and a 1 minute if the trend is super strong and the draw is very strong and the draw is close. So it's all going to depend on discretion. You'll see what I'm talking about when I get more into the examples. From there, once price is in that higher time frame gap, here, let me just bring this visual back up. So once price is in this higher time frame gap, you're going to want to get an entry confirmation. So this could be the highest time frame inversion between the 1 to the 5 minute. You could be looking for a change in the state, or you could just looking for a strong displacement candle. So again, running through this example again, let's just say right here we have our draw. We have, let's just say this is London high. Price is trending up. We have a clear draw on liquidity at London high. Price pulls back into this 15-minute gap. Let's just say we take this, we get a 3-minute inversion. We get a little retest in, and we take the trade up to London high. Pretty simple. Now, to increase the win rate and how we can increase our probability on the trades is an SMT. So let's just say we're looking for longs. We could look for a bullish SMT with ES on the higher time frame, the lower time frame, whatever. We could see if price swept out a higher time frame draw overnight, which I'll get more into in the examples. Like, for example, if we're looking for longs and we have draws above, if we seen that overnight price had already swept out London low and it swept out Asia low, it swept out previous day low, we know that the higher time frame sell side draws have already been taken, and there's a high probability that we're going to continue to the upside because our sell side draws have already been taken, if that makes sense. But I'll go over that more in the examples. And the last one is going to be looking for correlation with ES. We want to see NQ kind of doing similar things to ES. So NQ, if we're trying to look for a long on NQ out of a 15-minute gap, we want to see ES continuing to hold that bullish 15-minute gap so that they're both correlated and they're both going to be going up, because NQ and ES, again, are correlated assets. So that's the criteria. If you guys want to write this down, all this right here, and then I'm going to pause the video and then we're going to get into our examples really quick. All right, so This first example isn't like the greatest example, but I actually like it because it brings in a lot of parts together. So this was from Tuesday, December 23rd, and I didn't take this one just because I didn't like the volume, but this setup actually is pretty good. It would have been better if we did have a better draw, like a London high or an Asia high. We had this draw on liquidity right here, but basically, let me show you guys exactly from the top. So as you can see right here, NQ at this point had swept out previous day low. We can see right here we swept out the previous day low. And if we look at ES never swept previous day low. So we technically had a bullish SMT off of the lows. Okay. Then you go onto the 15-minute right here. And we can see that overnight, or not overnight, but earlier in the session, 8 a.m., whatever, we'd already swept out London low. We had swept out Asia low. We swept out previous day low. And then market opens up right here on this candle right here. We get this move up. We take out London high and Asia high, but then we get a pullback into this 15-minute bullish fair value gap right here. So at this point, you have to think of it two ways. If we inverse this gap, then we could look for lower. But if we're going to continue to hold this gap, we can easily look for longs back up, or at least just look for some type of bounce where we can take a continuation, because price could still technically go higher, right? We have a bullish SMT off the lows. NQ swept out previous day low. ES never swept out previous day low. So that's one thing to keep in mind. We had already taken out London low. We'd already taken out Asia low. We took out previous day low. We got a nice move up, a nice retrace, and NQ is continuing to hold this 15-minute bullish fair value gap. Now, this is where I really start to build confidence in this trade. If we look at ES, let me draw it out for you guys really quick. ES is also respecting this 15-minute bullish fair value gap. But one thing that you notice is if you put the midpoint on, let me just draw it right here, whatever. You can see ES came down and wicked perfectly at the CE point of this 15-minute gap. So when you see, if you're taking a trade on NQ, do you see ES continuously respecting the consequent encroachment of that gap? That's a good sign that price is going to want to respect and go higher in this case. So we have a clear draw higher that we could trade back up to, this high over here, or we could just look for an internal level that we could trade up to. Both NQ and ES are respecting a 15-minute fair value gap, while ES is respecting the CE point of that gap. We have an SMT on the higher time frame. So what do we do here? We're just looking for an entry. So we could say, okay, we want to see price continue higher, maybe back up to this high, or just take out an internal draw. So if we want to look for an inversion entry, we could look for whatever, like displacement CASD. So what I seen was this 5-minute gap right here. So as you can see, we have this 5-minute bearish for value gap. Let me just mark this out. So at this point right here, we can see that we're looking at the highest time frame inversion for an entry from the 1 minute to the 5 minute. And the 5-minute gap right here is the highest time frame inversion. We don't get it right here, but if we wait another candle or two, we can look for a potential entry. So right here, we get this inversion, and we can honestly just wait for a retest back into this 5-minute gap, and we can run our stops down here. We could run it below the 15-minute gap. We could target a 1-to-1. We could target back up to this high over here. It's totally up to you guys. I usually just look for the 1-to-1s for this month, but let's just say we look right here, right? So again, I'll run through it one more time. NQ swept out the previous day low. ES never did, so we have a bullish SMT. NQ and ES are both delivering off a 15-minute gap. So since this is a continuation model, price comes into the gap. We're looking for a continuation higher in this case. So ES is respecting the consequent encroachment of this 15-minute gap. We have a clear draw above at this high up here, or if we want to just take the low hanging fruit, we could target maybe say this 5-minute gap right here. Let's just try that, right? So at this point, we're looking at the highest time frame inversion right here. So we have this 5-minute inversion. We inverse it right here. We're waiting for a retest to get back in. Say we take the entry on the retest back into the 5-minute, like right here. You could run our stop below the 15-minute gap, or if you want to be safe, you could run it lower. I'd personally run it probably right about here. And then let's just say you just want to target into this 5-minute unfilled gap. If we play through, boom, there's TP. So again, running through it one more time, price sweeps out the previous day low. ES never sweeps it out, therefore we have a bullish SMT. We're delivering off a 15-minute gap, and it's holding, so what do we expect? We expect price to continue up to the next draw on liquidity. ES is also respecting a 15-minute gap, so we're expecting both NQ and ES to move up together. We look for the highest time frame inversion between the 1 to the 5 minute. We take this 5-minute inversion right here, we enter on the retrace, and we can target again to this unfilled gap, and we take about a 1.24R trade. Again, you could leave targets higher, but that's example number 1. We'll try to find a better example for 2 and 3. All right, so this second example is going to be a 3-minute continuation. Now, in this case right here, as you can see, we've already had a sweep of London low, and we have a clear draw ahead of this daily high. Now, I'll go to the daily and I'll show you what I'm talking about. It's this daily wick right here. So we're looking at a continuation up because we don't want to just force a reversal. So as you can see, coming into market open, we're already respecting bullish order flow. Price pulled back into this 5-minute bullish for value gap and displaced perfectly up on the 930 candle. Now, when you get displacement like this, you obviously don't want to just try to force a reversal, because if the trend's going to continue, it's most likely going to continue to deliver to that next draw on liquidity, which in this case is this daily high. So as you can see right here, price pulls back and wicks into this 3-minute bullish FVG right here. So my idea at this point is to look and see, do we have range to the next draw on liquidity? Is this an attainable high? Yes, this daily high is pretty close. We are trending up. We're respecting bullish order flow. I can just look at ES, see if we have correlation, and then I can look for an entry to that next draw on liquidity, because my idea, my thought process is, if this gap holds, it's going to push us to the next draw on liquidity, which is going to be up here. But if we trade through it, we inverse it, only then will our bias flip bearish. So until then, we got nice displacement off of market open. We're respecting bullish order flow. We're coming into a continuation confluence, which is this 3-minute bullish FVG. So I'm going to look at ES now and see what ES is doing. And as you can see, ES is doing the exact same thing. It wicked into this 3-minute bullish FVG, and it's showing that it wants to likely continue up. We got nice displacement, retrace. We're looking at a continuation to the next draw on liquidity. So what do I do here? I scale down and I just look for a simple entry. Pretty much, again, it can be highest time frame inversion, it could be displacement, whatever. So as you can see right here, we look for the highest. If you want to look for the highest time frame inversion, you go to the 5-minute. Obviously, there's nothing on the 4, nothing on the 3, nothing on the 2. But as you can see on the 1-minute, we have this gap right here that gets inversed on this nice displacement candle. So can you just enter right here with your stop here? Yeah, you could enter there, or you could wait for the retrace into the inversion. But regardless, your draw on liquidity is going to be this daily high. So whichever entry you take there, we're taking a continuation confluence out of the 3-minute gap. ES is respecting bullish order flow. NQ is respecting out of a 3-minute gap and also a 1-minute gap. We got nice displacement. We got an inversion. Whichever entry you take, let's just say you take the retrace, whatever, you get an entry there, and price delivers perfectly to that draw on liquidity. So that was example number 2, delivering out of a 3-minute gap. We have a super attainable draw above. We're continuing after displacement. We're delivering out of a 3-minute gap. We look for a simple inversion, displacement, inversion, whatever you want to take there, and you take it to that next draw on liquidity. So we'll get into one final example really quick. All right, so this is going to be our third and final example right here. This is going to be a short, and in this example, we're going to be looking for a 2-minute continuation out of a 2-minute bearish for value gap. So we're going to start off in the higher time frame. Starting off in the higher time frame, out of the 4-hour, what are we doing? We're delivering out of a 4-hour bearish for value gap while the higher time frame is in bearish order flow. Okay, so we're delivering out of a higher time frame bearish FVG. And on the 1-hour, overnight, you can already see we swept out London high, we swept out Asia high, we swept pretty much everything out. We're delivering from a higher time frame bearish for value gap. There's really no draws above unless we look all the way up here. So my bias is obviously shifting bearish, because at this point in time, just ignore this candle right here. We have London low as a draw, and we have Asia low as a draw, and we also have a 1-hour bullish FVG right here. So pretty much at this point, I'm just looking for a continuation model and to take lower to our draws on liquidity that are lower. So if we look over here at market open, market chops around before market open, and we get this nice manipulation and this AMD kind of setup. As you can see, if you guys don't know what AMD is, we accumulate right here. We range for about, I don't know, like 30-40 minutes. Accumulation, we manipulate right here, and then we look for the distribution. So we get an AMD setup at open. We've already taken out our higher time frame buy side liquidity draws. Again, we took out London high. We've already taken out Asia. We're delivering off a 4-hour bearish for value gap. So at this point, I'm looking for a continuation model trade lower. Okay, we get an AMD at open. We accumulate, we manipulate, we distribute, and price right here pulls back into a 2-minute bearish for value gap. Now, at this point, we don't have anything on the higher time frame, although we do get this 5-minute inversion, so you could look at it as a 5-minute inversion. But since it's the continuation model, I'm looking at this more of a 2-minute gap continuation. Price comes down and respects into this, or pulls back into this 2-minute bearish FEG. Now, my idea is this: if the bearish trend is going to continue and we want to continue down to those draws and liquidity, we're going to respect this gap and go lower. But if we come into this gap and we inverse it, then we're going to look to go higher. So I'm looking for an entry confirmation, again, displacement, inversion, whatever, in order to take shorts to look to target down to at least this 1 hour gap. So let me mark this 1 hour gap out right here, and then potentially lower down to London, Asia, like whatever, right? So pretty much price pulls back. Actually, let me just close this off for now. Price pulls back into this 2-minute gap, and then you can pretty much just look for an entry model, like I said, off of this gap. So let's just play forward on the 1-minute chart right here, and we get this nice displacement candle. Again, you could probably look for a retrace, or you could just take this because at this point, the draw is lower. The draw is lower, so it just makes more sense. Again, you could say run your stop above the body, and let's just say we're going to target a 1-to-1. We're going to target midnight open or something. We could target London low, whatever. We get nice displacement. It looks like the momentum is going to continue bearish. Let's say you take profit at midnight right there, or true day open, and then you take your second TP at London and Asia, and there you go, the 2.5 R trade. So once again, I'll recap this. Basically, price is delivering off a 4-hour bearish for value gap right here. We have a strong bias that price is going to deliver lower. We got manipulation above the highs. We've already taken out London. We've already taken out Asia. We've pretty much taken out all the buy side draws. The next buy side draws all the way up here. I highly doubt that's going to happen. We're likely going to continue the delivery downwards. Going into market open, again, we get an AMD type of setup. We get this nice accumulation. We manipulate, distribute, 2-minute continuation. Price pulls back into this 2-minute gap. We have a clear draw on liquidity lower. We can easily target down to midnight open, London low. We could target down to these relative equal lows, or not at this point, but we could have targeted down to these lows right here. There's draws on liquidity lower. So we look for an entry confirmation out of that 2-minute gap. So pretty much in this case, let me take this off. You could enter off this nice displacement candle right here, or you could have waited for this pullback into this 1-minute bearish for value gap. Maybe you could have entered, even gotten a better entry right here, but whatever, and you target the next draw on liquidity, which in this case, you're going to look for true day open or midnight open, or you could look for London and Asia low. So that's it for this one, guys. Again, I'll throw the criteria up on the screen again really quick if you guys right here. So again, starting from the top, for the continuation model, you're going to be wanting to have a clear draw on liquidity. You're going to be wanting session highs, session lows, previous day high, previous day low, etc. You want to see price delivering out of a higher time frame gap, which is going to be, again, it could be a 4-hour, 1 hour, 15, 5, 3. You can go down to the 2 or the 1, which we've just seen from that example, if the trend is strong. In that case, it was clearly strong. We'd already taken out of the buy side. We had clear draws lower. We were delivering out of a higher time frame gap. It just made sense that we would go lower. We got entry confirmations in all of our examples off highest time frame inversions, displacement on this last one, and then we used SMTs in some of the examples. We've seen price sweep out higher time frame draws overnight. Like for example, in this last one, we'd already swept out London and Asia and all that stuff overnight, and we look for correlation with ES on the other example. So that's it for this one, guys. This is how I'm trading continuations. I'm going to do a backtest video sometime this week too. I'll drop that, but that's it for me. Again, all the links in the pinned comment description, and I'll talk to you guys in the next one. Peace.